Hello, everyone. Thank you very much and welcome back. I got one message. Can you please share the last session recording? Okay, we'll look into this. Thank you very much and welcome back. And as you know that we are discussing today implications of the corporate tax on the free zone businesses. So as usual, we'll go through this first of all, whatever we have discussed till now, and then we'll go through the applications of the corporate tax on the free zone businesses in detail. So let's start the discussion. Okay, this is a recap of our previous lectures. Till now, we have discussed 7 lectures. In the first lecture, we have discussed overview of the corporate tax law. In our second lecture, we will discuss scope of corporate tax law and the applications of the corporate tax on the taxable person. In the taxable person, we will discuss exempt persons, out of the scope persons, and taxable person, resident taxable persons, and non-resident taxable persons. In our third lecture, we have discussed the exempt persons in detail. We said there are 9 different types of exempt persons. 4 are by default exempt persons, and 5 they will have to apply to the FTA to claim the exemptions. Then we'll discuss out of the scope persons. We'll discuss the natural person will not be subject to corporate tax. Non-resident juridical person can avail corporate tax exemption. Non-resident juridical person, it will not be, has no PE, it will not be subject to corporate tax. Foreign PE of the resident person can claim exemption. Other like transparent partnership, funds, trust, and family foundation, which has not been structured or avail options from the FTA, it will not be subject to corporate tax. Then we discussed UE sourced income. In the UE sourced income, we discussed any income that is being derived from the UE, from the resident person, non-resident person. 3 different conditions were there. So any of these income, if someone is deriving any of these income, we said it will be considered UE sourced income. Now discuss history of the permanent establishment. Permanent establishment itself that we discussed as well. Then in the last lecture, we discussed corporate tax registration. In the corporate tax registration, it was the guide that has been, the extract has been taken from the guide. And in the guide, they have given various sections on the corporate tax registration. And we have discussed these are the key and important sections of the corporate tax registration. And in this section, identifications and entity details were the most important thing. We need to establish a legal person, natural person. Then we discuss all these things in detail in our previous lecture. Then we discuss applications of the corporate tax and the partnership. We discussed even the local partnership. It can be a foreign partnership, local partnership. It can be unincorporated or it can be incorporated partnership. We discuss the taxability, or we discuss the applications of the corporate tax on the partnership. Today we are discussing, this is our 8th lecture, and today we are discussing applications of corporate tax on the free zone businesses. This article number 3 is the very important thing regarding the applications of corporate tax on the free zone businesses. They said corporate tax law on the qualifying free zone person will be applicable at the 0% on the qualifying income and 9% on the non-qualifying income unless and until the income is exempt or out of the scope. From this definition, few things are very important that will be helpful in our further discussion. And these things are, first of all, law has used the word qualifying free zone person. We can break this word, free zone person, then we can break first of all, it will be a free zone, then it will be a free zone person, then third, it will be a qualifying free zone person. So first it will be free zone, then free zone person, and third, it will be qualifying free zone person. And fourth important thing is the qualifying income. So if the qualifying free zone person is earning qualifying income, it will be subject to tax at 0%. All other income will be subject to tax at 9% unless and until the income itself is exempt or out of the scope. So 4 things are very important. We'll discuss all these things in this lecture, what these 4 things are. We have discussed 4 things as I mentioned earlier, is free zone person, qualifying free zone person, and qualifying income. So from this definition, this is very clear that corporate tax is applicable to the free zones persons as well. A lot of people are asking these questions. Corporate tax will be applicable on the free zone person, or corporate tax will not be applicable on the free zone person. This is very obvious. This is very clear that corporate tax will be applicable on the free zone person. The rate of tax, it can be 0% or it can be 9% unless and until they are earning exempt or qualifying income. So once the corporate tax is applicable to the free zone person, they are liable to comply the corporate tax law provisions as well. So they are legally liable to register and calculate, legally liable to calculate the taxable income, legally they are liable to submit the annual tax return, make the tax payment, and making any other and comply with all other provisions of the law. And we all know this for the registration, there is no threshold like the threshold for VAT registration, for the corporate tax registration, there no threshold. Without any threshold, if they are falling under the ambit of the corporate tax, all free zone companies, all free zone person, they will be liable to register. Some exceptions are there that we'll discuss in detail. So we can say qualifying free zone person. If the qualifying free zone person is earning any income, qualifying income, it will be subject to tax at 0%. Still, this is subject to tax. If they are earning any income other than qualifying income, it will be subject to tax at 9%. So as I discussed, based upon this Article 3, 4 things are very important, and these 4 things are free zone. First of all, what is free zone? Second thing, free zone person. Third is qualifying free zone person, and fourth is qualifying income. If all these 4 conditions are being fulfilled, income will be subject to tax at 0%, otherwise it will be subject to tax at 9%. Now we will go through all these 4 things one by one. The first word is free zone. It has been given in the corporate law definition section. This is a designated and defined geographical. A free zone is a designated and defined geographical area within the state that is specified in a decision issued by the cabinet at the suggestion of the minister. So first of all, they said this is the designated area, this is the defined area, it will be considered free zone, but we need to wait for the cabinet decision that they will provide the list of the free zones. Important thing is we need to, like in the value added tax, they said designated zone is a fenced area, but I cannot see any word in the corporate tax law. I believe every free zone will fall under the definition of free zone. But as I mentioned, we need to wait for the cabinet decision. They will give a comprehensive list of free zones. So based upon this, so first thing is free zones for any designated area, any defined geographic area that will be given in the cabinet decision, it will be considered free zone. But we need to wait for the cabinet decision. They will provide the comprehensive list of the free zones. Second thing is a free zone person. The first thing was free zone. Second thing is a free zone person. In the free zone person, this word is very important. Juridical. Juridical persons incorporated and established, otherwise registered in a free zone, including a branch of non-resident person registered in a free zone. So basically, first of all, they said this is a juridical person, not a natural person. We have already discussed in our first lecture what is the difference between the juridical person, natural person. We have established that the juridical persons are the companies which are established other than a natural person who is conducting the business in the UAE. It will be considered a juridical person. We established that a juridical person will be limited liability company, public shareholding company, public joint stock company, partnership which is incorporated, fund that had been restructured as a legal entity. All these will fall under the definition of juridical persons. Even we have established in our second lecture that natural person who was conducting the business in the UAE, these natural persons will not fall under the definition of juridical person. It will be considered a natural person. And we have discussed frequently asked questions of the ministry which has been given on the side of the ministry. And they said sole establishment or civil companies, individuals who are running sole establishment, individuals who are running civil companies, they will not fall under the definition of a juridical person, but it will fall under the definition. They will not fall under the definition of juridical person, but they will fall under the definition of natural person. So from this definition, it obviously look like that the person, individuals who are conducting the business in UAE, they will not fall under the definition of juridical person. Once they will not be under the fall, they will not fall under the definition of juridical person. The question is, so if individual is conducting business in the free zone, so will they not be able to qualify as a qualifying free zone person? Will they not be able to enjoy the benefits of 0% corporate tax? Apparently from the definition, it clearly looks like because they will not be, because they said free zone person means the juridical person, natural person are not part of this. So all the companies which are registered in the free zone, established in the free zone, incorporated in the free zone, and these are juridical person, they said this will be called a free zone person. Even it will be included the branch of a non-resident registered person. Natural person will not be included as I discussed. Juridical person, I have given the definition as well. Limited liability company, fund structure, legal entity, public shareholding company, public joint stock companies. So I have just discussed that what is the natural person. The important thing is to establish natural person. Natural person means individual. If the individual is conducting any business in the form of sole establishment or in the form of civil company, it will not fall under the definition of juridical person. Moreover, in the frequently asked question, they have given for natural person, a cabinet decision will be issued in due course, specifying further information on what would bring a natural person within the scope of VAT. That we need to look into we need to wait for decision on this as well. But again, going back, so what we established, free zone means any person defined in the cabinet, designated defined area, free zone. Free zone person, juridical person established in the free zone other than a natural person. Now the third thing that we discuss is qualifying free zone person. So if a juridical person is established and if juridical person is incorporated within the free zone and this person is meeting these 4 conditions, then it will be considered a qualifying free zone person. I'm repeating. So if any company, any business which is a juridical person, which is not a natural person, which is established within the free zone, and the person is qualifies the person fulfills these 4 conditions, and these are the 4 conditions, then it will be considered the person is a qualifying free zone person. So these 4 conditions are: maintain adequate substance in the UAE, getting qualifying income, prevailing transfer. So what are the prevailing transfer pricing laws and regulation? The person is compliant those transfer pricing laws and regulation, has not elected to be subject to tax, subject to corporate tax. If these 4 conditions are being fulfilled, then we will say the free zone person is a qualifying free zone person. And if this qualifying free zone person is earning any qualifying income, that income will be subject to tax at 0%. In this definition, important thing is adequate substance. Law is silent about this, but I believe we know this. Economic substance regulations are applicable in the UAE. Once economic substance regulations are applicable in the UAE, these economic substance regulations requires that the person must have adequate physical asset, the person must have adequate operating expenses, and the person must have adequate employees in the UAE, along with 2 other conditions. These 2 other conditions, the person must be meeting SIGA. SIGA means core income generating activity, and the person must be meeting 3 tests. Usually there are 3 tests are there in the economic substance regulation. One is a SIGA test. SIGA is core income generating activity. Second is the management test. The management decision making should be in the UAE. Third is the adequacy test. In the adequacy test, there are 3 further conditions, as I mentioned. This is the first one, this is the second one, and this is the third one. So this is the requirement of economic substance regulation. Corporate law is silent about the adequate substance. Might be they will give anything in the regulation, might be they will give clarity in the future. But for the time being, they are asking that the qualifying free zone person must have adequate substance in the UAE. I believe it will be considered like that. The person must have adequate physical assets, adequate operating expenses, adequate employees, management should be there, core income generating activities should be there. If all these conditions are being fulfilled, then it will be considered that the person have adequate substance in the UAE. But we need to wait for the regulations, and we need to seek a clarity from the FTA on this as well. So 3 things we discussed. We discussed free zone person, and qualifying free zone person, and 4th thing, qualifying income. If the qualifying free zone person is earning qualifying income, that income will be subject to tax at 0%, otherwise it will be subject to tax at 9%. So qualifying income law again is silent about this. They said the qualifying income, cabinet decision will be issued on this, on the qualifying income, and we need to wait for the cabinet decision that will give us in detail and thorough understanding of the qualifying income. So once this cabinet will be introduced or discussed again. So and then we are establishing if qualifying free zone person is earning qualifying income, it will be subject to tax at 0%. All other income will be subject to tax at 9% unless the income itself is exempt or out of the scope. Summary of the discussion. From this discussion, this is evident that the income of the free zone person can be classified into qualifying income or non-qualifying income. Qualifying income, if the person is meeting all those conditions, it will be subject to tax at 0%, otherwise 9% under this income is exempt or out of the scope itself. And second thing, qualifying income, which is required for a free zone person to qualify as a qualifying free zone person, the same income will be subject to tax at 0%. I'm repeating. Qualifying income, which is required for the qualifying free zone person, for the free zone person to qualify as a qualifying free zone person, this income will be subject to tax at 0%. All other income will be subject to tax at 9%, or it will be exempt or out of the scope. So if the qualifying free zone person have qualifying income, if the qualifying free zone person has only qualifying income, which is subject to tax at 0%, still the qualifying free zone person will be liable to register, liable to submit the return, but the rate of tax, it will be 0%. We cannot say the person is earning qualifying income, the 100% income is a qualifying income, it will be out of the scope, it will not require to register for corporate tax. No, this is not the case. They will liable to register, they will be liable to submit the return as well. However, a qualifying free zone person can elect to be taxed at 9% as given in Article 19(1) of the law. Qualifying free zone person which is earning a qualifying income, it will be subject to tax at 0% as we discussed, but law has given an option to the qualifying free zone person that they can elect to be taxed at 9%. So what is the reason why the qualifying free zone person will elect itself to be taxed at 9%? Basically, in the law, there are certain limitations for the qualifying free zone person. There are 4 limitations for the qualifying free zone person. These 4 limitations are: qualifying free zone person cannot be part of the qualifying group. Basically, in the qualifying group, a lot of other conditions are there. Once the juridical persons are meeting all those conditions, it will be considered a qualifying group. Within the qualifying group, the businesses can transfer their asset, they can transfer their liabilities at the book value, and it will not be subject to corporate tax. Basically, once they are transferring their asset, they are transferring their liabilities from the one member of the qualifying group to another member of the qualifying group, it will not be subject to corporate tax. At the book value, or you can say WDV, written down value, this amount will be removed from the transferor books and it will be added in the transferee books. The law says if the members are part of the qualifying group, corporate tax will not be applicable and transaction will take place at the book value. But now they are asking the qualifying free zone person cannot be part of the qualifying group. This is a limitation. Second limitation is qualifying free zone person cannot join the tax group. We know that again, a lot of limitation for the tax group as well. Minimum 95% shareholding by the parent company, voting rights, controlling rights, same financial year, same tax period. All the person must be juridical persons, and the person should not be a qualifying person. The person should not be an exempt person. So means a qualifying free zone person cannot be part of the tax group. And we know this for the tax group, intra-group transaction will not be subject to corporate tax, and the group will be liable to submit only single return. But the qualifying free zone person cannot be part of this. And third thing is qualifying free zone person cannot enjoy the restructuring relief. If there's some sort of restructuring within the group, if there is some sort of restructuring, even without out of the group, if group is transferring full or independent part of business to another person, another taxable person, law says it will be treated as a transfer of going concern. It will not be subject to corporate tax. But if this business is being transferred to the qualifying free zone person, or qualifying free zone person itself transferring business to another person, business itself is being transferred to the other taxable person or the potential taxable person, still it will attract corporate tax. But if this qualifying free zone person would have been any other person other than qualifying free zone person, then they would have enjoyed the restructuring relief. Transfer would have been treated as a transfer of going concern. It would have not attracted corporate tax. But if the person is a qualifying free zone person, it will still attract corporate tax. So this is the third limitation. Fourth limitation is law allows us that one taxable person can transfer the losses to another taxable person. Again, there are a lot of conditions over there. But if any of the person is a free zone, qualifying free zone person, still they will not be able to enjoy this transfer of the losses benefits as well. These are 4 limitations. So once this qualifying free zone person cannot avail these 4 benefits, now the question arises, if the qualifying free zone person can elect itself to be subject to corporate tax, so will these all 4 limitations will be removed? This is my question. Law is silent about this. So law is asking qualifying free zone person cannot enjoy these 4 benefits. They cannot be part of the qualifying basic qualifying group. They cannot be part of the tax group. They cannot enjoy the restructuring relief. They cannot transfer their losses. These are the 4 limitations for the qualifying free zone person. If the qualifying free zone person is electing to be subject to corporate tax, will these limitations will be removed? Will they be able to part of the qualifying group? Will they be part of the tax group? Will they be able to enjoy the restructuring relief? Will they be able to transfer their losses to another taxable person? Law is silent about this, and I am leaving this question for you. I personally believe, once the person is enjoying to be subject to corporate tax, so all these limitation principally needs to be removed, but we need to wait for the clarification. We need to wait for the regulation. Might be they will give some sort of clarification in the regulations. So in nutshell, I can say all free zone business are subject to corporate tax. So all free zone companies should work for the smooth implementation of corporate tax to avoid any complexities in the future. At the end, these are frequently asked questions that were taken from the Ministry of Finance site. UE corporate tax will apply to the entities established in the free zone. Yes, we have discussed. So corporate tax will be applicable. It will be subject to tax at 0% or it will be subject to tax at 9% unless the income itself is exempt or out of the scope. Is the 0% free zone CT regime applicable automatically? Yes. Qualifying free zone person that meet relevant conditions will be able to benefit 0% free zone corporate tax regime automatically. However, the qualifying free zone person can elect to apply the free zone CT regime, but instead be subject to regular CT regime and rates. So this was discussed already as well. So what is qualifying free zone person? We have already discussed 4 conditions are there. Maintain adequate substance in the UE, derive qualifying income, comply with transfer pricing rules and maintain the transfer pricing documentation, and then not have an made an election to be subject to corporate tax. If these 4 conditions are being fulfilled, then we'll say the person is a qualifying free zone person. Will a free zone entity be required to register and file a UEG return? Yes, we agreed. They will be subject to corporate tax. They will be liable to register. They will be liable to pay tax at 0% or 9%, whatever we have discussed earlier. So will a different UECT treatment apply to entities established in a financial free zone? No, that they have not given the classification. They have not given the different bifurcation in between the free zone. They said that they have used the word free zone. So financial free zones are the free zones, normal free zones are the free zones in the mainland, free zones, all this basically, they have no separate classification for the free zone. All free zones will be fall under the same category. So they will be subject to tax as well. The entity established in the financial free zone will not be exempt or out of the scope from the corporate tax. So will free zone entities be subject to global minimum tax? The same treatment. Even the entity in the free zone entity is in the mainland. If the entity is fulfilling the pillar 2 conditions, then they will be subject to tax. And we know these pillar 2 conditions, it will be introduced in corporate tax law regulations, and higher tax like 15% it will be applicable on the entities which fall under the pillar 2 regulations. So again, we need to wait for the regulation, and further clarification will be provided in the regulations. This is over from my side. If you have a question, you can drop me an email at mahar@kresscooper.com. You can drop an email to our tax director, Faiz Hashmi. You can drop an email to tax manager or assistant tax manager, any of us, and it will be player supporting you. So we listen, we understand, and we deliver. If you have any question, you can give us a call as well at this number, or you can drop us an email at info@kresscooper.com. Thank you very much. This is over from my side. If you have any questions, yes, you have few questions. Okay. Can you please share the first session recording? You can, I think first session recording is not on our YouTube channel. but I'll try to make sure this should be available on the YouTube. Second, Muhammad Umar, sir, can we get these slides? Slides, I can share the PDF file. You can drop me an email. You can share your email address. I will share the for sure. There's no problem for it. Usma is asking, hello, we have free zone company with virtual office and 3 visa only. Virtual office, 3 visa, but we have a group company in mainland, which is proper office and more than 40 employees. So can we say free zone has adequate substance? In the adequate substance, we have discussed in detail economic substance regulations require that the company must have SIGA, core income generating activities in the UAE. The company must have management in the UAE. The company must meet the adequacy test, and these adequacy tests are the company must have adequate employees, adequate expenses, and adequate assets. But the question is, corporate tax law is silent. Even they referred that if this is the adequate substance as per the ESR regulations, then still it would have been fine. So this is very difficult for me to comment on it that your entity will be fulfilling the economic substance regulations or economic adequate substance. We need to wait for the regulation. I personally believe if you have a core income generating activities in the UAE, you have management, you are meeting adequacy test as well. So it will be assumed that you are meeting the adequate substance test. Again, we need to wait for the regulations on this. Does this mean out of the scope companies now need to act as if they are caught under ESR rules? Very difficult to comment on this. The law is silent about the ESR rules and regulations. So we need to wait for the regulation. Then we will be able to establish one opinion on this. Can a free zone registered service company provide its services directly to the UAE mainland customer and generate revenue from them? Can a free zone registered service company provide its service directly to the UAE mainland customer and generate revenue from them? You can do this. You can free zone company, but again, your income may be subject to tax or 0%. Again, this is a juridical person, natural person. First of all, the company which is in the free zone, we need to establish this is a juridical person or natural person. Because they said sole establishment in the definition, we gone frequently asked question. If natural person is working as a sole establishment, if the natural person is working as a civil company, it will fall under the definition of natural person, not under the definition of juridical person. First of all, we need to establish this company will fall under the definition of juridical person or natural person. Once this is established, then we need to look into their income. For sure, income can you give the services from the free zone to the mainland company? You can give the services. The question is, will this income be qualifying as a qualifying income or non-qualifying income? If this income will be qualifying income, it will be subject to tax at 0%. Otherwise, it will be subject to tax at 9%. Why would QFP will up to 9%? I have already discussed in detail. There are 4 limitations basically. First of all, qualifying free zone person cannot become a part of the qualifying group where they will be able to transfer their assets and liabilities at the book value. Second, they cannot become a part of the tax group. Third, restructuring a leave, qualifying free zone person cannot enjoy restructuring leave, and restructuring leave businesses can be able to transfer the full business or independent part of the business at the book value without any corporate tax. And fourth thing, whether one taxable person can transfer their losses to another taxable person, because these are the 4 limitations. And the question is, if the qualifying free zone person is basically elected to be subject to tax at 9%, principally these 4 limitations needs to be removed, but the law is silent about this. We need to wait for the regulation. If required, we can seek a clarification from the FTA as well. Is free zone amnesty period of 50 years will apply to all free zone? It will be specific. Free zone, basically amnesty period should be applicable for sure, but the law again is silent about this. We need to wait for the regulations or further clarification from the FTA. Is capital gain from sale of business subject to corporate by mainland or free zone in a tax group or not? Capital gain from the sale of business. Sale of business, it will fall under the restructuring relief. If all these conditions are being fulfilled, then the transfer of business will not attract any corporate tax. Otherwise, it will attract corporate tax. Is the recording of the previous sessions available? You can find it on our YouTube channel at Kress Cooper. Might be you will find it there. If in case you are not finding it, you can just drop me an email. I'll share the link. Ashfaq, okay, I got your email address. Thank you very much. And we have free zone company having exempt income only. Free zone company having exempt income only. Entire expenses like salary and will be etc. will be disallowed. Salary for sure it will not be allowed. And any other thing that is being given to the director, management officers, it will be subject to transfer pricing rules and regulation we need to keep in mind. All free zone allowed to collect the sales proceeds from the local partners for the export sales. All free zone allowed to collect the sale proceeds from the local partner for the export sales. This is basically no bifurcation for the specifically till now in the law, export sales, local sales. They are asking qualifying income, non-qualifying income. This classification you can find it in the value-added tax. But in the corporate tax law, there are no bifurcation. They are asking very simple thing. Are you earning qualifying income or non-qualifying income? Qualifying income definition they have not provided till now. They said they will issue cabinet decision on this. In the cabinet decision, there will be a comprehensive and thorough understanding of the qualifying income. So once you are earning qualifying income 0%, other than this 9%, but we need to wait. There are no bifurcation, local sales, exports, and even you are from the free zone, you are selling on the mainland, free zone to other free zone to out of the UE. We need to stick to the one criteria, and this one criteria is: are you earning qualifying income or are you earning non-qualifying income? Okay, guys, your questions are over as well. I really appreciate your support. Thank you very much. And have a lovely day. If you have any further question, you can drop us an email or you can give us a call as well. Have a lovely day. Thank you very much. Thank you. Bye-bye.